talk us through where you're most worried about demand. Is it China and some of the Asian economies?
Good morning. So as we see in this report, we have revised down our global forecast for 2023 for the first time this year. We're seeing weakness, especially in Europe, and as the manufacturing remains weak. We're also seeing some negative sentiments in China, but Chinese demand has been holding up very strongly, and now the expectation for this year is that Chinese oil demand growth will be 1.6 million barrels a day, and that's 70% of the global total. So while the economic outlook for China remains fragile, the recovery is losing steam, as we say in our report. The oil demand is really holding up. We're also seeing a lot of the growth in China coming from the petrochemical sector, and this is putting steam cracker margins in the rest of the world under pressure. So we have lowered our forecast for oil demand in the Middle East that normally, and other countries that export petrochemical products to China. We're also seeing weakness in Africa, where higher fuel prices are putting imports and demand under pressure. So it's a mixed picture. Oil demand growth, as I said, we have revised it down, but we're still expecting 2.2 million barrels a day of growth this year, which is robust, but is slowing into the end of the year and in 2024.
So, Toril, does the global market stand to tighten quite considerably in the second half of the year?
Yes. So far, as we say in our report, the OPEC cuts that were put into place last November has so far been offset by increased supply for other producers. We saw core OPEC Plus producers cutting production by about 2 million barrels a day from October through June. But at the same time, we see increased supplies from other producers, including Iran, has increased production by about 500,000 barrels a day over the period to reach a 5-year high. We're also seeing higher supplies from the U.S., natural gas liquids, seasonally higher biofuels, other producers such as Brazil ramping up production. So far, those cuts from OPEC Plus producers have helped supply, been offset by higher supplies from other producers. But from this month, the additional cut of 1 million barrels a day from Saudi Arabia, lower exports from Russia, will lead to a steep decline in supply for this month and next. And with demand rising seasonally, we see a global oil demand increasing by 1.6 million barrels a day from the second quarter to the third. And with limited gains in supplies from other producers, we're expecting a sharp tightening of market. OPEC production can be about 2 million barrels a day below the demand for its crude this month, 3 million barrels a day in August. So a significant tightening for the second half of the year.